Hey Al, thanks a lot. It is running time. I'm going to pop one here just a minute and we'll get started. Just let me know the sound is all good. And if you haven't signed up for this exclusive access, do that because it's going to be even more important as we go forward to be on this list. We don't abuse it, period. Thank you. That's good. So we'll be getting started here in just a few minutes. Lots to talk about today, for sure. Just a couple more minutes, folks. Get, That is the Runapop. I just got one more thing to get set up and then we're all set to go. Welcome everyone to the Kendall Report live stream, our weekly broadcast that we do. There's a lot to talk about today. There's plenty going on in the background that the markets are paying attention to, and that's probably why the S&P struggles here at 4,200. And I'll talk about something that I haven't discussed for a while. It may be going back a year and a half ago, and it'll make sense when I talk about it, what happens around these even numbers. This one is very interesting as we continue to struggle right here at S&P 4,200. And even though we've been above it, I'll go through the details here in a minute. There's still a lot of underlying upward pressure that still remains in the market. So that's what's keeping it alive anyway. But there's plenty of uncertainty. And as you know, I need to talk about something, and I don't want you folks, this is not political. It wouldn't matter who's doing this. But we've got the President of the United States running around basically like a book tour, peddling his tax and spend policies to all the governments. They're trying to get this, Janet Yellen, all of these folks are trying to get us to go to this 15% flat tax. They don't, so I get the premise of it, but it's too bad that when the government gets the money, they just squander it. I mean, you know, and now that they've made it clear that modern monetary theory is in play and they've just tweak the books and make the money and spend it, then, you know, what's the point of taxation? Taxation ends up to be just a penalty on people they don't like, is what it would appear. And so we're seeing a lot of resistance, though, which is interesting, and it shows that I guess that there is not a consensus among governments. Ireland is pushing back. They're really not interested in what Joe's talking about, and so we're going to see more of that. It's going to, that's one of the things I'm going to be watching. I talk a lot about this over the years. This goes way back maybe to the 80s for me, is that taxation matters. I came into markets in 1979, right, literally 4 or 5 months before Reagan was elected, and we went from Jimmy Carter, which we're going back to. People joke we're going back to the 70s. Well, we're going back there in a lot of ways, and the 70s weren't really very good, by the way. I graduated from high school in 1970, and things weren't very good during the 70s. But what we had was these massive tax rates and all this spending and things going on, and they didn't even know what spending was. That's what they talked about at the time. But what we're seeing now is going back to that, and that is why I think markets are struggling here. There's a lot of uncertainty. There's talk about infrastructure, but I'm not sure we're going to see much infrastructure. Even the infrastructure bills that we're talking about the actual money doesn't end up in infrastructure. They keep I guess best way that they're making new definitions of what infrastructure is, such as people infrastructure and social infrastructure and all that. I get that those things exist, but it's most of the money's going there. Many weeks ago, we had talked about a portfolio that was circled around the infrastructure deal. Well, there is no deal, and it doesn't even look like they can get anything done. And I mentioned this in a video the other night. Initially, it looked like that it was going to be easy for the administration to get all kinds of stuff done. They're already seeing things start to go tatter around the edges. There's a lot of division, which is a good thing because that means there are diverse opinions in the government. It's not all one thing. It's not easy to ever do this. And so the reason why I bring all this stuff up, I think it has a lot to do with what's going to happen going forward. I'm going to get into talking about the dollar and some things that are going on there. We're going to go through inflation. We're going to go through a lot of these elements today because there's just so much that is coming into play that markets have to attempt to digest and figure out what's next for the markets. And it's challenging to say the least. So let's go in. I've got a small list this week, only one page that I'm going to go through. The first part was the taxation issue, and I am going to go through the meme stocks today. So they're back in play. Our software has been on a lot of these, so we've captured a lot of that. The next subject I just want to talk about before we get deep into the podcast today is the inflation. Now we're seeing, and I'm going to go through the 10-year here in a minute. 10-year is declining. It's back under 1.6. That's a good thing. It doesn't really mean that inflation hasn't been there. But some of the things we're seeing, like yesterday we saw the Case-Shiller index on the housing come out at 13.3% year over year. Housing's still expanding. I'm actually going to cover some lumber and some of these other building commodities today that I think they're very interesting. There's a lot of folks out there in the world we live in now. It's all about clickbait. Matter of fact, for the most part, we don't even put titles on our videos anymore. I played that game for a while, and all we're doing is this is daily market commentary. So make sure you've subscribed if you're new to the channel. And actually, we're very close to 30,000 subscribers. So if you haven't subscribed, I mean, it's not very painful to subscribe to a YouTube channel, right? You could hit the bell so you know when I do live streams and other events that we're doing. And there is some things that I'm working on that I think are very exciting. I will be going to TradingView today using some of the setups there. I found out I had a meeting last weekend, so we're getting really close to doing some things with TradingView as well. I think I've got about 340 followers over there. I don't know what it is. Every time I get on this tube, my allergies kick in and I start to get a runny nose. So it's just classic. One of the things, just going to the inflation, I think his name is Claudio, or one of the Fed presidents. He was talking this morning that no big deal. If inflation spikes up, they'll just raise rates. No big deal. They can control it easily. And I'm not sure that's no big deal. I think it's going to be a bigger deal than they think, with debt just expanding like it is, getting close to 30 trillion just on basic debt, not even looking at liabilities and all those type of things. Those numbers are impossible to even to comprehend. But he's just like, no problem. I did see some rhetoric. I follow the ECB, the European Central Bank, on Twitter, and there was some tweets that they put out the other day saying that it might be time to cut back. It's getting closer to the time to taper back the assets, and we've seen the same thing out of the Fed. They talked about this last week and some of the minutes that came out. So we're starting to see some talk, and the way this world works now, especially in the Fed, the Treasury, the government, they like to float ideas out there and just see how the markets respond to them. And if they don't say anything crazy, then they'll just kind of try to move further down that trail. But this taper thing is probably going to be more real in the fourth quarter. Everything I see right now, we're floating through the summer. People are getting back to work gradually, but at least they're coming back out and starting to function more normally. I'm hoping that next year that we can have a conference somewhere in this country and have a get together next year sometime. And I'm trying to target where and when that might happen. So I'm looking forward. I'm just kind of watching things, and we'll give you about a 6-month advance. I think that would be a lot of fun to get a bunch of us together and hang out. I've got a couple interesting things that I'd like to do at one of these conferences. So the taper talk is real. It's probably not going to become reality until maybe fourth quarter. It could be beyond that, but it really has a lot to do with how things come back on. Just a couple things. I'm trying to tie together some things that I talked about last week, and I'll be done with these opening comments here in just a few minutes, and we'll get into technicals and talking a little bit more about what's going on with the indices and what have you. But it appears to me that we're going to see this fourth quarter maybe coming into the first of the year. There's going to be some realities of everything that's happened and the shift of the government. For the most part, we find out when governments change or the administrations change, a lot of things stay the same, but some things get tweaked and changed. We're seeing some interesting things happen after the colonial shutdown. All of a sudden, they shut down the Keystone, but all of a sudden they realize, hey, pipelines are a pretty good deal, right? They tried to divert things from pipelines to trucks. It's not that easy. So that was kind of an awakening, which I think is going to have a material effect on at least thought and how things might be handled as we go forward. And so I'll be watching that as we come into the fourth quarter. And, so I think the inflation is going to be muted for the next couple of months, and it will be fourth quarter and beyond where we start to see these things. The thing I was going to tie together a minute ago was that I talked about last week that when Europe opens up, and somebody said, well, Europe isn't closed. Well, it's more closed than it is here, and that was my point. And I do think once supply chains are going to continue to be challenged, I think there's going to be a lot of things that are going to happen in the marketplace that are going to keep those constraints, are going to keep some underlying heat in the markets from the standpoint of inflation. And the Fed's made it clear they want that, but how much do they want? We're going to find out. Final comment on these opening comments here is Amazon is taking over Vegas, right? They're buying, it's amazing. When you buy out a major studio, you buy out really 29 properties in Vegas. Is pretty amazing deal. And just like with Whole Foods, Amazon is going to change things substantially from that standpoint, because I think that that there's going to be, when MGM culture gets changed to Amazon culture, there's going to be some things there. But they're really playing, probably Amazon's weakest play in that they have is in sports. So this is going to get them into that level. I was talking actually with my brother the other day, and we were talking about what's going to happen when they have the Super Bowl at the new stadium in Vegas, and what a mega event that's going to be. And so, Vegas is really alive. I could easily be there by dinner if I want to go tonight, just by driving. So there's just a lot of things going on in Vegas that are really good, especially we get beyond all this COVID thing that we've been through. Yeah, and I agree, Antonio. I just saw a comment come across. How are they going to taper? That's it. How are they? And I don't think they're going to be able to. So there's going to be some challenges, and that's why I'm targeting this whole scenario as we come into the, as we come into the fourth quarter. That's going to be where all of these challenges are going to start to show up, and I'll be talking about that on the channel, and just from market commentary, and then trying to update this on Wednesdays. If this is your first time on this stream that I do every week, I always start off by just talking about a lot of things I don't get to talk about in my 10, 12, 15-minute videos that I do every day. The videos on the channel are really to support our institutional and some retail clients that are out there, and to from use of the software, giving perspective, and it's also very useful for a lot of other people. And so, make sure, like I told you before, subscribe and follow the channel, because I do 5 videos every week and a live stream, and if things get crazy, I'll light the screen up and we'll talk. But yeah, so just to digress a little bit back to this MGM deal, I think that's going to be pretty significant. It could change some of the culture. There's a lot of major properties that MGM controls in Vegas, not to mention all the content from movies and stuff that Amazon Prime is going to get. So, and they're buying it for $8.4 billion. This is a $1.6 trillion company. This cost of capital is zero. This is what looks like a big deal is a nothing deal to Amazon. And it's going to be interesting to see at what stage these guys get into some of the things that we saw, just in history. I certainly didn't see it, but Standard Oil with Rockefellers and all that. How big is big in this world? And folks that are around me all the time, I talk about we live in this world of big numbers. So how big is the number on these tech companies when they need to be looked at and actually broken up? Where is that number at? So we've never had trillion-dollar companies before, and the whole world has changed a lot. And just with this word trillion, I joke that if you bump your shoulder on a trillion, you just made $10 million if you just rubs on your shoulder here, So that's it. So I think I've gotten everything out that I want to talk about. Something else I am going to talk about and cover today in my next sequence, and I'll tell you what that's going to be, is the airlines. And I think the reopen trade, and just to look at to see how these assets are starting to move around and if there's any real traction there. As far as end of the world disasters go, there doesn't appear to be anything obvious anyway. Doesn't mean there can't be a black swan and something we didn't know about. But this is all being reflected in the markets, and that's the beauty of being in the markets and reading the markets and letting the markets tell you what's going on. And sometimes there's some interesting things that you can just get from the markets by being an observer which I do, I always tell everybody, I look at the technicals, and if the technicals are telling the market's going up or down big, I ask myself, I do a reverse fundamental analysis. Here's the technical, what could make that happen? And that's a lot of what drives my analysis in the quiet time when I'm not on screen and doing videos. I'm looking at these things. We are involved in managing billions of dollars, so this is an important part of what we do, and having that perspective and where the rotation is going to be. So that, we had just going all the way back to earlier comments, as we thought originally that this infrastructure trade was going to be a big one. I'm not sure how big it's going to be, because I'm not sure they're going to do it, and we certainly need it. There's a lot of things. If you go to Asia, you can see what infrastructure looks like. If you come to America, you feel like you're in the Old West yet. So there's a lot of things certainly needed to be done here. And the unfortunate part, what needs to be is not the government spending money, but we need free enterprise and companies to figure out these projects and start putting them together, maybe with the blessings of the government. But when they get too involved, nothing moves forward. This is just the way it is. So yeah, so okay, I think that'll do it for now. Let's switch over to another screen here. Let's start to take a look at the indexes. But before I do that, let me tell you what the plan is. I'm going to go through S&P, NASDAQ, Russell, the spread of Russell versus NASDAQ, and then we'll go from there. We're going to go into interest rates, dollar. We'll cover the currents, the cryptos, and then we'll talk about probably go to the airlines and some other elements there. I'll cover the metals as well, and gold is actually doing quite well. The last I looked, we're down negative now. It's going to struggle at 1900, but I'll go through all the details here in a minute. But I think that some of these other trades, and I will look to you folks to give me some things that you want me to cover when I cover these things, and I'll tell you that when it's time. Okay, so let's go ahead and dig into some charts and see what's going on here. So as we were talking, I'm going to flip over to the SPX here and go to the daily SPX. And it's very interesting. We just cannot stay above. We got the 42.61. Yesterday we printed 13 and change, I believe was the high. Yesterday's high, 42.13.42. And we just can't seem to break out of this range. There's something else happening here which will bring in some potential risk to these markets, but I don't think it's substantial. As you look here and you see the cursor, I'll put a cursor here by this PPM1, it is just exploding now. It's at 0.31, and this suggests that the 10-period moving average is going to start to accelerate. It's at 41.58 right now. That number is rising at the moment at about 12 handles per day, so that's going to be 70 tomorrow, basically 75 the next day, and so forth. So we're going to see the support level move right up underneath this market action, and when that happens, we should start to see this thing accelerate out of this range. And for all practical purposes, let me just draw in something here. For all practical purposes, actually, we have been, I'm going to just mark over here. I'm just going to draw a box around this. We've been locked in this really sideways range since early April. So we've spent the better part of 2 months grinding this out. We got this little spike down here, and we didn't really follow through there. And we're just got this zigzag formation happening here from an Elliott viewpoint. There's just nothing there from other than this is a corrective phase. It's a consolidation, and I'll show you on the weekly, and we're going to go to the monthly graph here in a minute, just to give you some perspective of what's happening within the trend. So you look at this trend, there is no trend, and you could even come up and start screaming negative until you look at some of these other charts. But as this PPM1 is accelerating, still waiting for PPM2 and 3 to break out, and we need this cyan line is the second derivative that needs to get above that level. Once those kick in, then we're going to have the acceleration out of this pattern. So this, when we go to the weekly, we're still on SPX right now. And we go to the weekly, I talked about this on Monday's video. 41.42 is the critical level, which is a 10-week moving average. It's up at 0.68. We look at the PPMs here, 0.68 plus positive, 0.53 and 0.53. So these are all trend modes. And I've talked to you a lot about this type of pattern before, and what happens when what happens is this trajectory of these trends tend to carry through. This is a weekly trend. It takes quite a bit to start to turn these indicators down here below negative, especially when they're up at well above that 0.25 number. So if you're new to the channel, when I'm talking about these price pressure momentums, measure the angle of attack of the moving average. And I talk a lot about these patterns that you get momentum precedes price. So we get the spike in momentum here. Hang on here, my tool crashed, sorry about that. So we get the spikes in momentum here, and then we get into what I call trend mode. These things happen. My box is behind it here, but in here was a spike and trend mode. So what happens is each time we get this acceleration, it's almost, it signifies that this is the next trend. So there's 3 PPMs on here because there's 3 primary trends within the weekly. So we have the short, intermediate, and long term within the same trend. And what's happening is these trajectories tend to go on. We've all used moving averages. Most of people look at moving averages, and in our work way back in the 80s, what we want to do is determine the probabilities of these projections and these trajectories continuing, and when we could start to determine when they weren't going to continue. And that's what these PPMs all stand for. So this is what's going on from the standpoint of this. So you can see now this spike up early. So this is the short term, intermediate, long, and they should stagger in just like what you see here. So there's a very strong trend here. And I think I can put on a Fibonacci projection tool here. And I've talked about this a lot as well. As we start to look forward, the projection tool, this is a tool that I built. We're working on building this in on TradingView right now because this thing's really cool. And I'm going to make this indicator, the plan is it's going to be public domain. So I'm going to put it out to the public in TradingView when it comes out. It is being worked on as we speak. But this projection suggests, if you look in the table down below, that right now this goes all the way back. It starts to show you the projection when it was first calculated on 10/23/20. You can look at the channel. You'll see way back in October of last year, I talked about new Fibonacci projections revealed. And this was when these projections were revealed. They seemed, at the time we were at 3,500, and the projection you can see here is 4,605, 5,100, 54. That seemed pretty ridiculous last October. Now that we are at the 4,200 level, we're now it looks much more realistic, and these are still in play. They're still being calculated, still valid, and these are the projections. So I've talked about 4,400, I talked about 4,600. The trolls come out because the market goes down a little bit, so I was wrong. These are intermediate to longer term projections that I'm talking about here. These are not, that's why, you know, the whole thumbnail thing with putting things out like that, that's just playing into the clickbait game. So you guys come here for, hopefully for good content and for my analysis, and that's what we're doing. But as far as the projections go, these are still valid, and that is a minimum. Now, that's not even a big deal to go from 4,200 to 4,600. That's not a big deal at all. You know, we're talking about 400 points on a $4,600 index. So it's, you know, it's just not a lot. You know, you're looking at between easily a 5-10% rally from here. And I'm going to tie this all together with our database here in a minute. And that's the whole thing. I see somebody mentioning the reverse repos. I'll try to talk about that when we go through the interest rates here shortly. So when I talk about interest rate, Gregory Donaldson, yeah, Greg, remind me of that. Yeah, I saw that story. I always tell people, if you want to know what's not going to happen, go to Zero Hedge. These guys, I mean, it's doom porn, right? So it's always some kind of doom, and they played that story before. But I'll talk a little bit about what I think's going on there anyway. Yeah, Larry Hill, if Jay could talk, I'm sure he would tell you thank you. So let's dig in and let's go over to a monthly view of the world. And I'm going to take off that Fibonacci projection tool for right now. So when we start to look at these longer term charts, I just showed you a minute ago the concept of the momentum surging and then going into a maintenance mode. So I'm going to carry this forward on this chart, and you know, I'm super bullish long term. There's nothing that's going to stop this thing, and you folks have heard me say this before on this channel, is that I think ultimately if inflation shows up, the S&P is going to be your inflation hedge. You know, so yeah, I guess I saw somebody laughing at my comment about Zero Hedge. They blocked me on Twitter, but they got thrown off Twitter, so they're back on Twitter. So I don't know why. I'm not really a troll. I just called them out on something I guess they didn't want to be called out on. I get it. I know what it's like to deal with the social environment. I've had a couple major Twitter wars with some prominent economists, and I won't mention names, but you always know you win when you get blocked, right? They just don't want to deal with you anymore. They don't have an answer. I feel, you know, I've been hit on as well, and so it's okay. But this is what I want to show you on this momentum. And this is like, if you're following me, you're following my work, you need to understand this concept really clearly. And I'm going to make this, I told everybody earlier that you need to go to the Kendall report and sign up for the exclusive content just do it. You'll find out. We don't abuse your email. You can opt out if we did, so it's not a big deal. I know we all get enough junk as it is, but this won't be junk. You're going to want the emails when we send them out. But this is what's important. You'll notice, and this happens when markets are really strong. I just threw on the PPMs, I just threw 3 arrows up there. All of this momentum is surging basically at the same time. And the pattern on these PPMs after this surge is what I'm drawing in. They'll lose some of that huge momentum, and then they'll get into maintenance mode. So what happens, I'll draw in this indicator, just kind of go back and forth like this. And that's how it will look going down the road. What happens on the moving averages is these trajectories continue out, not to infinitum, okay? That's the problem the reason why I don't use trend lines is there are 2 problems with them. One, I drew them, and if you watch every trend line out there, every guy that uses trend lines for analysis, I immediately, don't mean to offend anyone, but immediately you get categorized as a amateur. Okay, that's just like, so that's yeah, it's not even 3rd grade math. It's just drawing lines, and what happens is it starts to build or limit expectations of what markets do. And there's a little bit with these market grid numbers, they do put a limitation on the short term, so you have some expectations, but they're also drawn through Fibonacci's and a volatility index that comes from the market. Everything from those lines are derived from the markets. Just like Bollinger Bands, only Bollinger is standard deviation lines, so they have some weird little things that go on. I know John, and I've known him for a long time, for probably 35 years. But they're very useful if you want to spend the time to do them. I never liked, because there was some quirky stuff out of them. This is very straightforward. We do get some what I call volatility spikes and kind of the bubble-like thing that happens in Bollinger Bands, but it's got a lot different characteristic. And like all of us, we find something makes sense to us. That's what we stick with. But the point of this illustration is that these indicators going into this maintenance mode that I've drawn on each one of these tells us that these trajectories of the moving averages are going to continue, okay? So let me take this off of here. So this is, markets are so probably, overvalued. So that's another thing. Whenever you think they're overvalued, I have a great line. I got to come up on screen for this, okay? This is important to understand. I have a great line is you need to have a process which to evaluate the market, because I always say process over attitudes and opinions. Attitudes and opinions keep you in when you should be out and out when you should be in. This is why this overvalued, overbought, oversold concept has just been BS forever. Markets in bull trends stay overvalued, and until we start to see some other things happen with the metrics within the markets, there's no reason to even worry about that. I get all that, but you're not, a lot of things that in the backdrop that are happening here are happening because of all this influx of capital from the Fed and spending and all that stuff. So you can't underestimate those. And it's not just, don't fade the Fed. I'm just telling you that they're overbought, oversold, overvalued, undervalued. There are some good metrics there that you can go. When you apply it in too big a picture, it ends up into an attitude and opinion. That's my point. So it's not, it's fine. A lot of folks will look at things like that, and that's good to know. But this longer term pattern is very strong. In fact, one of the strongest markets that I've seen maybe ever. I could actually go back and tell you that to be the case. We could go back. I'd have to bring up. I could bring up TradingView, and there's some longer term metrics we could look at there. Okay, so um, yeah, and I guess yeah, I don't want to go too far down that trail. I'm really whoever said that. I'm really not. I just be careful with that kind of thought because you'll find yourself watching this market run away, and that's all. Find a process. Don't care where you find it. Get a process, something that works. Follow it. And one of the things that I'm going to be reviewing is like my three major setups and everything. Abbey Road, you're awesome, man. um, yeah, I once again, there's some new metrics out there. I'll just answer Abbey Road's question. Is all the margins? That's all right. I'm trying to find the right way to say this. That's just more of someone trying to find that it's overdone. Prices are gonna tell you when it's overdone. We're gonna see there's going to be a material event that's going to happen, and you're going to know it. I'm going to know it. I'm going to tell you guys some giant reversals. Something has got to happen with the metrics. What I'm showing you here on the monthly and just going through the hierarchy of these markets, there's nowhere near this. So I could actually spend probably 2 hours just talking about all this stuff because it's so in depth and what's happening here. And I will be honest with you, I've seen some bull markets. I remember in 1982, 83, and going into the 87 highs. um, I, it's a real shame that I have lost. I have a gap in some of my old newsletters I wrote back in the 80s, but in September 16th, 1987, I wrote the risk reward to owning stocks in the United States of America was zero. Basically, get out. Now, I didn't think there was going to be necessarily a crash coming, but there was no reason to own them. So, and it had everything to do with all the metrics out there. It became very obvious. I don't think it's obvious. I think if these margin issues and other things, overvalued stocks and all that. I mean, we have one of the services that we offer is a screening service that gets updated every month, and we have a lot of stuff. And in fact, let me show it to you because this is important. I think I'm kind of glad. I love these live streams because sometimes they get diverted into something that's important to talk about, and I think this is one of those things. So let me on another screen here get something set up. So let me let me put up this chart so you can watch the market trade for a minute. I'm going to go off screen. I'll bring this up and just it'll take me just a minute to get there. Okay, so I'm over on Portfolio Expert, and what I'm going to do is I'm going to go to my account, and under this I'm going to go to the stock screens, and I want to show you this because this is important, and we get a great feel. We get a great feel of the markets through the screens as well. Now these are all fundamental screens, no technicals at all on here, right? So we have accelerating growth screen. Um, let's see if this thing's going to fill in here. Yeah, it's still uploading here. It's a giant spreadsheet. So I'll just talk about this. We have several categories actually. Let me just go in and start another instance of this. But we have several categories, and you can see this by going to our website and going there under stock screens. I think this is important when you're making decisions, finding stocks, doing all this stuff. So this is a good segue here as we're going through the indexes today. So what we're looking at here is these are the screens that are available. Growth screens, it shows you the capitalization that's in there. We have the blended stock screens here. We have the value screens, and one of our favorites is the magic formula. So you can click on each one of these. You can go to our website. This is open to the public, so there's nothing being, you can see what these screens are. You can't get the screens, but you can look at them. But we've got GARP, which is growth at a reasonable price. And, so you have all these different, actually one of the better ones, low beta, high return companies has always been a good screen. But what I want to show you, I'm going to go back to these stock screens here, is these are the number of stocks that show up. Now these get updated at roughly the first week of every month. And these high growth, I don't know why this is not filling on. Let me just see if that comes in. I'm not sure why it's doing that. So let me see if it'll let me open it in Google Sheets here. That's somewhat helpful. But this is actually good that I'm showing you. There's a number of things that I know this is going to be hard to read. It's real tiny, so I won't explain it. But I want to go into this because this is, I don't care. There's plenty of services you can get this from, okay? But this is, all of these screens were set up through one of our contractors, which is a certified financial analyst, has worked for me, former analyst at Janus Funds. And what we did is we set up all kinds of things. We give you a bunch of metrics here, but this is the thing I want you to see is the high return growth stock. There's still a ton of these things showing up on these metrics. And we don't tell you the exact metrics, but we do give you the ranges of what we're looking at. But this is interesting when people start talking about, like you see here, U.S. GARP. This tells you the whole story. This is growth at a reasonable price. So going to the overvalued market, this is pretty lean. This tells us, just by looking at this screen, tells us there's only like 5 stocks that are in this U.S. GARP. So this is growth at a reasonable price. This is a very highly stringent type view of the world. This is, Gary Peters, I don't know if you're a subscriber, but it's right there on your WaveTech board. You can just go to and get that. But we also have metrics like what the holding periods are and whether these stocks present more risk or less risk, which ones are more timely. This low beta return has always been a good one. And our favorite, which is this magic formula value. And I want you to see this. This goes from cell 305 all the way down to 637. So there's hundreds of ideas in this magic value. So while you could say that the markets are way overpriced, this screen is just so robust of the companies that meet the criteria that we have there. So if we go back over here and we go to the magic formula, let's talk about what magic formula is. Magic formula seeks it's mostly in it's a value blend here. A small mid, it's mostly mid and large cap stocks. It looks at the operating income after depreciation. You can go here and read this little bit right here, and that will tell you what this thing's looking for. But this, Jay could tell you, he's one of our master portfolio builders. he could tell you how good this screen is. You can build some crazy good portfolios out of here and find a lot of good ideas. So I dove into this at this level for a reason, and the reason is that this is part of having a process. This is part of this is part of having a process, finding a way to find constituents to trade, evaluating them fundamentally, and then having some way to go into a technical tool or quantitative tool, and that's what we do. But this is our process that we do, fundamental into the quantitative and the technical, to ultimately to decide the timeliness of any of these ideas. But this is a really good way to look at, is the market overdone? Even in old school value, there's quite a few stocks here. Then we've got U.S. multi-cap value. There's a fair amount of stocks. So there's still ideas out there in the value. So the screens that we have up here, as I was showing you a minute ago, accelerating growth, high return. We call them SMID, small mid-cap growth from there. So everything's right there as far as it goes. But anyway, so let's go back to TradeStation and take a look at going back to the indices. I know I've really gotten on quite a ways down this trail with talking about this, but this is important from the standpoint of understanding markets and where they are and what's possible. And those screens have been a guiding light for me on top of our database that I cover all the time. That has always been a guiding base. And from a standpoint on a short-term basis, just going over and bringing up Portfolio Expert and just kind of reviewing having a process, right? The process here is when we get down here and we look at, this is from last night's view. Let me zoom in here. There's a lot to be looked at here. We got 53% of our stocks on a short-term basis are long, so we're not anywhere close. Somewhere around 78 to 80% is telling us we're getting really extended. We're really, I cover this every night in my videos, they're really just grinding here. They're trying to, the ultimate constituent list to go forward on is just grinding, trying to get to that point where markets are, who's going to move this market forward. And that's still being decided through the quantitative view of the world, the technicals. Stocks are coming in, they fail, they get out, and there's a rotation going on. I talk often about this. And the other thing that I think is important to understand is some of these other metrics. And I cover all this all the time, but it's important. It kind of triggered me going into process over attitude and opinion. When you have a process of actually evaluating the market and looking at things, I'm fortunate. I've told you folks this all the time. I'm fortunate because I have all of these metrics that are coming out are things I developed. And so I've tried to give you folks as much transparency as I can to give you an idea of what these things are doing. And that's definitely definitely is it. And I will cover crude. So definitely we'll go through that. Yeah, so Tamer, I see your question about 401ks. I guess, I don't know, are you a subscriber right now? I'm not sure to WaveTech or anything like that. If you are, let us know. Glad to do some stuff on maybe on a WaveTech training or something. That's probably something that should be covered. Okay, so, but these metrics are important because what I want to zoom in on is you look at it, you can see what the average days held right now. Average days right now is only 8.23, the current, And so we're very early. The average cycle on these short-term databases is 40. I was talking about this maybe on a video, maybe last week's live stream, is really what really what's happening from the viewpoint of the database is we get this rotation, and we've seen 4 complete rotations. I want to go back to maybe not quite, probably back to August of last year, where we saw the database ramp up on a short-term basis. We got all the way to 90% bullish. We dropped back. We actually went to 8% bullish. So we completely recycled it. And around September, our intermediate models kicked in, and we had a lot of buying come in September, October, November of last year. And those cycles are still in play. And so what's happening with the market in general is that it's still in that rotation phase. So the short-term database will go from roughly 20% bullish to about 70 to 80. Sometimes it'll spike a little bit above that, a little below it. And that rotation happens multiple times within one intermediate cycle. The average intermediate cycle is about a year. You can see that on the screen. I'll zoom back in here real quick. But you can see on the optimized weekly, 201 days is the average holding period. That's the better part of a year. There's roughly 200 days. Our model 2.2 is, our model 3.2 is 218 days holding. That's right at a year, about 220 days these are trading days in a year. So we're still right now in that about halfway through the cycle on the intermediate. And like I said, we've seen multiple rotations happen, and this database kind of backs up, refreshes. There's a lot of other dynamics that happen, but that's really from the viewpoint of what's going on within the markets. It's important to understand. So I know I went way down that rabbit hole pretty far, but we went from, talking about process over attitude and opinion to talking about having a fundamental way to find stocks, and and then last but not least, going back to a quantitative approach and all of that. And that's basically what this platform does. And my multivariant invest ARK Invest MDV is only down 7.8% on the year. There's actually a couple buys. We've been seeing some buying back of a lot of Kathy's stocks lately. While she was buying, I did a couple on my Twitter account with Kathy Wood's strategy is buy the falling knife. And ours is to exit, come back in once it's stabilized, raise capital, protect the overall capital, and then you come back in when market starts to stabilize and you start to set up patterns like what I've just talked about in all these trends and things that went on. So let's see. I'm just trying to get back on track where it was. Let's go and do a NASDAQ review. I need to get through these indexes. I know I went down a big trail for you on that, but I think there's a lot of value there for everybody listening, and it's going to give some real perspective on how to approach these markets. I mean, I told you guys last November and just early December, the easy money is over, okay? It's over. Now you're going to have to be much more skilled to make money in the markets. It's going to be much more treacherous from the standpoint of these trends. And we're just seeing this thing. Haven't looked at the SPX. We're trying to trade back up to 4,200. So we're just grinding up here. But the point is that by having a good selection process, doing the right things is really what I'm trying to put out there on this channel. This is what I want you folks to understand. And so, yeah, and make sure, do two things, folks. And I know I put it out there earlier, but but do this. I'm just going to put this screen up for a minute. Is sign up. Get it. Just give us email address, and you can make a comment. But if you have interest in 401ks and doing real money management, not speculating with your 401k, then make sure you sign up and get that on there. And that's it. Yeah. So I am working on it. Thank you, Steve. Let me come back on here. Yeah. So as we just continue to go through, let's go and take a look at the weekly. Let's go daily. Let's go to NASDAQ. And NASDAQ is really, I mean, I don't know how, this thing is really setting up in a bullish formation right now. Because this thing is just ready to explode to the upside and put a next leg into the market. And I'm going to show you some numbers here in a minute. So let's have a little Runa. Yeah, little Runa commercial, not getting paid. Okay, but this stuff is like, one of these is 2 cappuccinos, and they don't have the jitteries you get with that other caffeine. It's a tea. Anyway, enough of a commercial, right? But here's the NASDAQ. Are just setting this up. There's a couple elements inside of the NASDAQ that are somewhat concerning. I'm going to zoom in on that real quick. Is right at this moving average configuration is a little concerning from the standpoint of how it is right now, meaning that we still have the 21-day moving average declining in the pattern while the 40 is advancing, and now the 10 is turned up. I'm just going to put these PPMs down on the screen here so you can zoom in on it. So this first one is PPM. First one is PPM 1 here. PPM 2 is about to cross its second derivative. PPM 3 has already done it. I was talking about this on the S&P a few minutes ago, and we've already seen this happen here. We're about to confirm with the PPM 2 starting to come out with this, and that will be, once we get that confirmation, we should see some acceleration and see the next level. So let's go to the next level. And let's take a look at this is the weekly chart. The weekly numbers on the NASDAQ are all incredibly bullish, 0.63, 0.30, 0.43. Those are PPMs, price pressure momentum. And what they tell you is they're telling you that we have probabilities of the market remaining above that 10-period moving average right now are greater than their 60% probability for that to happen. So we're going to continue to climb in that mode. And I'm going to put on the Fibonacci tool here real quick. And we had a couple things I want to talk about here. Let me bring this up on full screen here. Is a couple things that are happening here is we got this range of expectations, or the Fibonacci target, 15,156. This is on the NASDAQ futures, 16,286, and 16,984. There was some old calculations here that go back to that October calculation on the S&P. It has now been moderated. This pattern has changed. So this is important to understand. This old Fibonacci projection has been revised, but what you'll see here is the mid projection was 16,486. If we go over to the new calculations, it's 16,286. So that lowest, we're probably looking at a more targeted range now between 16,200 and 17,084. And, so that's where the current Fibonacci projections have to be. We would have to close well below the 40 period moving average to on a weekly average to negate that. That does not look likely. In fact, we'd have to close. Yeah, we'd have to close here. Let me give you a number. 12,609 to negate that. So we'd have to drop 1,000 points on the Nasdaq down below that number to get triggered. So these are valid projections looking forward. We're seeing the PPMs, PPM1 actually accelerate again. So we're starting to see that acceleration in the intermediate. I'm going to go over to the monthly. And I'm going to pull this back so you can see this, and I'm going to go through one more time this illustration that I've been talking about as far as this momentum situation here. Here we go. It'll be very quick. We have momentum accelerating, and what's next? We get deceleration and then sideways. All these should come back in and go sideways. This should end up in a sideways range. We're talking about over on the left here, big numbers. Whole number 2.29, not a 0.25, but 2.29. So these are insane numbers. And as I talked about earlier, these trajectories of these moving averages, they just don't roll over very easily. Even in 2020, what we did was we came right to the 40-month moving average. And actually, that low, I believe, was the 200-week moving average. I'll bring that back up in a minute. But these trajectories are going to continue. That red line is going to be the important line. Let me get that value back. And that value is at 12,610, this monthly NASDAQ futures, 12,610. So we're looking at 300 points per month rising. So that's going to keep the support levels coming up. Right now it's going to be 12,900, then it's going to be 13,300. And by the time we get to the end of the summer, we're going to be basically where we're trading now. So we're going to be looking at how the market grid's set up, and those grids will be really important to understand. So let's see what all I got. I got into crazy mad scientist mode there. Thanks for hanging out. I really appreciate it. So let's go over to Russell. And we're going to go to the Russell cash. It's up almost 2% today. This sucker's really running. Okay, so let me back up and go to daily. Usually as soon as I say the NASDAQ's going to outperform the Russell, it'll start to claw back. I'm going to show you the spreads. And even with the spreads today and what we're seeing, there is a net 160. Yesterday, it inverted by that much, so it's just basically caught up. I'll show you on the spreads. It looks pretty dramatic, but it's really, there's a rotation going on here, and that's exactly what's going on. Yeah, and JJW, I agree about Kathy. Yeah, she's into FOMO. Yeah, by the dip, it might go back up anyway. So this is interesting because the daily Russell, those of you who watched the channel for a while, you know these market grid numbers. This is we got a potential for an RXT sell signal on the Russell. 2234.98 is the magic number. We're trading 2247. So if we close above 2234.98 today, we should go sideways to down for a couple of days, and that probably tells you we'll see what else we got. I don't think we have we're nowhere near those numbers on any of the other markets. So this little boost that we're getting is pretty big. I'm going to buzz through this one pretty quick. Weekly chart, I've talked about this before. We go back to February, we're basically sideways. The much different configuration than what I just talked about in the NASDAQ. In fact, you have these moving averages rolling over. You actually have a negative weekly 10-period moving average at a minus 0.18. This thing is not at the same mode, and this is why my argument will be it's going to lag the NASDAQ based on just configuration alone. It's still, that doesn't mean it's not going to go up. It just means it's not going to outperform on a relative basis, which I will show you next here in a second. So let's go over to the monthly. And the monthly is actually locked in this range. And every time I bring this chart up every week, I always go from there, and we just got this monster range we're working. So we look at the market grid, we're looking at the low 2132. We've been just below S2, R1 2319. We haven't even got up to an R1 yet. So we're really just in a sideways range. But just like with these other indices, okay, let's get this point clear. So before somebody says I'm negative on the Russell, I am not. Okay, the Russell is still in a bull market. The same metrics that I talked about in a minute. I'm going to go through this, then we'll do the spreads, and then we're going to move on beyond the stock market indexes. But as we go here, this is what we're seeing. We're seeing all three of this momentum surge. And just like I told you, this is going to be formation here after momentum surge. What has to happen is it just needs to stay over a value, and typically they'll stay over 0.5. Once again, these numbers are huge. 4.12, 2.16 on the far left, 1.04. What those mean is that there is like zero probability for this market to decline below its 10-month moving average. Now, grant you, it's at 1506, but it also tells us something about the trend, is that there's very minor probabilities of this thing reversing and collapsing from this position. And I keep telling you that maybe dog days will be here, but there won't be a summer sell-off that will happen. I do not believe that will be the case. So I think we're going to stay probably locked into some kind of formation. Maybe let me remove that real quick. Probably this market grid will collapse in just a little bit, get into sideways mode. Somewhere down here it'll do something like this where it'll start to take off. Okay, so let's go to the spread, and then we're about to move on out of these indexes. And so this is what I'm talking about. Here's your Russell, NASDAQ, and this is on a spread basis. You can see it is upticking today, but it's a long ways from trending like it was. So let me break that down, and then this is what I'm talking about when somebody go, oh, Bob said it was going to underperform, and today it didn't. Well, it didn't, but I want you to see this. Last September, I was telling you that this was going to be the place to be. Now what I'm telling you is this is going to be the laggard, okay? So this is the pattern so far. I talked about this. This is going to be your resistance point here, and it'll be interesting to see if this thing upticks. And then what I'm looking for here is, do we get stuck in a range, or do we take this range out like I've drawn in? And if that's the case, then that'll just tell you how the setup is from the standpoint of that just tells you how the setup is on the markets, and what I just showed you, how the stronger configuration on the NASDAQ versus the Russell, they're both going to go up. One's going to go up a little bit more than the other. So it does look like these large cap stocks are going to continue to be dominant in the pattern. So, okay, we got through it. What time is it? Oh, that was a long run. I get it. Thanks for hanging in there. Hopefully you found that super helpful. Okay. So where are we going to go? Let's go ahead and touch on some interest rates and the dollar. So I want to buzz through this pretty quickly. I think it's going to be, I actually talked about this last week. I thought we could go to around 154. We actually spiked down to, we spiked down, when was this? On this 7th. And we spiked all the way down to 1.47. I think we're going to start to find some support, although we have some Fibonacci projections here. Let me zoom in on that real quick. You'll see right here, these lines here. I think I can get this so you can see it. It's interesting, we're getting some Fibonacci targets, and I would go with the minimum one here at 1.48. And the PPMs are also, going back full screen here, the PPMs are showing that this thing is rolling over. We actually have a negative 0.74 on PPM1, which is well into a downtrend mode, minus 0.14 on PPM2, and minus 0.26. So we do have this downtrend in the interest rates is pretty substantial. It's just, can we get down into these lower levels, 1.48 down to 1.40? That's possible, and that may be what it takes maybe to get the markets to get that much more optimistic. That may be what we're looking at here. Let's go to the weekly. Weekly patterns suggest the primary demand line is on the 21 right now. It is at 1.46. So that is kind of confirms what I just talked about on the downside with this downtrend in the daily. So that's going to be your major support. You do have a negative PPM1. So this is the story here. We're going to get sandwiched between 1.46 and 1.62 for a bit here. And I would say at least 3-4 weeks or more. That's going to be the number. Now, the PPM on PPM2 is at a plus 2.20, so about less than a 10% probability for the market to get under 1.46. That's about 10 basis points from where we are, and that's a big move in the market, in the bond market, and the upside is going to be capped off around 162, probably 160. So we're going to see that continuing or be the constraints as we go forward. So that is interesting. If we go to the monthly, it just plays out even more. S2 1.44, R1 172. We did get up to 170 this month, so we basically played out the month. But look at the PPMs here on the monthly. This is worth noting, as we've got a huge surge, 9.96 and a 0.29. So now what's about to happen is the 10 period moving average is going to cross through the 21. And when that, I don't know, people got names for all this stuff, golden crosses, all that stuff. This is just what this cross tells you is this is going to be the point where the market hesitates. When you get these crossovers, this is where it's not a bullish crossover. It's usually a negative. It pulls back into the averages. It's not necessarily, oh, it crossed over, so there's some magic number. What is it when the 50 and the 200 cross and all that stuff? That's just very bogus. I've been meaning to have a buddy of mine put together a simple trading model that would trade that thing, and you could run it over long-term data, and you could just see how terrible of an idea it really is. But when these moving averages cross, they are ultimately longer-term positive, but the short-term for 2 to 3 bars are negative and certainly suggest a sideways market. And I laid out those parameters there pretty good just a minute ago. So let's go to the Dow. And the Dow, I talked about this. This is at such a critical level. 89.21 is the magic number. So far this month, we've been down to 89.54. So we're sitting on the cliff. We're trying to figure out whether this thing's going to roll over. That we do have some hope down below at the 200-day moving average, which is, I'm sorry, this is monthly, so 200-month moving average at 86.93. So there is some potential for it to hold. The last time it was down there, it held that number almost exactly. It was 88.13, and we got down to let me move this up so we can get this. We get down to 88.44, and that number is 88.28. So we get right down to that 200-month. Maybe we retest it. If we get through it, our gold will be above 2,000 when that happens. That will be the trigger. And it's interesting that today we're getting a big bump in the Dow with the interest rates down. So there's still just a lot of flows there going on. And we look at the daily chart real quick, you're going to see that we're actually trading back to the 10-period moving average right now. The last is 90.08. 90.06 is the 10-period moving average. PPMs are trying to actually bottom out on a short-term basis, so we can move back as high as 90.43 and save this thing for another month. But we're going to have to keep a close eye on this. I've talked a lot about this particular scenario because my long-term thesis was that we're going to enter into Japan 1984. What that means is that where they expanded the monetary base and the yen stayed stable, and it actually increased purchasing power of the yen around the world, and this would increase the purchasing power of the Dow around the world. And that's why Biden's running around trying to sell his new book, which is Tax and Spend. And I don't know that a lot of folks are going to be buying into that. A lot of them have already done that, and they're still going to be. That's just going to make the tax havens on this planet even more substantial. Even if they did get a minimum tax, it's still going to be better to move away from the U.S. rather than have more competitive tax rates and do more business. So that's one of the big dilemmas in being in business is what you charge. Do we have fewer customers and charge more, or do we charge a little bit and have more customers? Where's the best metric to get the most traction? And that's what these governments are trying to figure out right now. And it's the game that's being played is much different. It's much different. People, and I've talked about going back to the 70s and Jimmy Carter days. That's from a taxation viewpoint. From a strategy standpoint, what's going on right now is much different. That's a whole podcast show. If I could get attention of my buddy Hugh Hendry, he's pretty hooked up with Raul right now doing stuff. So I know they're doing a lot of stuff together. So I would like to get Hugh on and have a debate about this. And I'd also like to get Richard Werner on and do that as well, because I think we could have an amazing debate about what's really going on in this planet and what the outcome is likely to be. Okay. All right. Just looking at some of the things you guys are talking about here. Yeah, delighted. I always there's a term that I never understood, which is investment, long-term investment. Don't know what those are. They sound dangerous. And it's not about short-term trading. I'm talking about long-term. Our modeling process, we can do secular trends, intermediate, and short-term, and you can actually trade on a multivariant level, which is what you should be doing. So I'm going to go over, and I'm going to bring up TradingView here, and I'm going to go off screen here, just so we can take a look. And these are the PPMs on TradingView, and also the grid. And let me bring up a data window here just so we can see. This is actually lumber, and a lot of talk about lumber. This is short-term lumber. Just going to what happened on the housing starts yesterday. I still argue that lumber's maybe overpriced. I'm going to show you a couple things. I think we're really at a major tipping point here on lumber. I'm not sure it's going to just roll over that easy. I just drove by to come to my office here. I have to drive basically where there's a lot of people fueling trucks. There's a truck stop around the corner, and there's all kinds of activity. The amount of construction people that had their trucks loaded with lumber and building materials is insanity. So did they get overpriced? Maybe. I think some of the mills are coming back online. A lot of the issues with lumber here, as we look at this, was really had a lot to do with mills being shut down and trying to get back in line and catch up with demand. And there's just there's just a lot going on here. It actually got to a point where it was cheaper to build with steel than that. But let's go over to a weekly chart here, and this is what I want to show you on this, because I think this is important. And if you do want to follow me on TradingView, I'm just Kendall Report, all one word. So if you look up Kendall Report, that will do it. That'll get you to where I'm at. And I think it looks like this. This is what it looks like here. I've got a couple ideas I put out there. I haven't done a lot of stuff yet, but there's some things that on there, and it's really interesting. I think I'm really going to like the community over there, because they're very strict about stuff that goes on there, so you don't get all the crap you get on YouTube. So it's pretty nice. I spent a lot of time with a guy who's very successful, actually knows the founders real well, which I'm hoping to get an introduction to once I get certain things done. But this lumber trade, all of a sudden we're right on the 10-week moving average. 13.12 last trade. We're at last trade 13.34. So we're definitely setting right here, PPM 1 at a 0.35. I've actually got an issue with the PPMs on this platform. It's not showing me all the digits. It's rounding off. So I've got to get that fixed. because I need to know if it's 13.52 or 0.25. So that was something I found the other day when I was going through some of the indicators here that we're using. But everything else looks good. The market grid looks good. But you can see we're likely to go into one of these high-level consolidations, and we're going to see an interesting pattern set up here, which just tells you, and I've been talking about the entire scenario around housing, it's going to stay very tight for a while. Nothing's going to change. There's a lot of migratory moves around the planet, people moving from one area to another for whatever reason they're doing it. There's a lot of it going on. There's a couple other charts here I think yeah, so that's good. Let's take a look at, let's go to copper, because there's a story there as well. This is the weekly copper. The PPMs are all very positive, and yeah, now these are showing the right values. Now we're showing all the, I don't know, maybe something happens when it gets to, I don't know what's going on with that other chart. But anyway, so we're looking at copper is also setting right on the 10-week moving average here. This is a weekly chart. And we've got very positive 0.98, 1.06, and 0.92 on the copper futures. So copper's still in a mode that's really good. And I just don't see there being that this is not the kind of position that we're going to roll in. And I'm just going to show you one more time. I know you guys are probably getting tired of me showing you the same thing over, but I do want you to be able to see this. I guess today ended up to be somewhat of an more education here. Let me just bring this up. So here's this pattern again that I've talked about. Momentum surging. It actually, there's secondary surges here, but we get into this maintenance mode. And that's exactly what we are here on copper, and it just continues there. There's no doubt that this trend is going to continue along those lines. I know I can move this back a little bit. So same thing as before, these trajectories of these moving averages are going to continue on that slope, and the PPMs, price pressure momentum, actually measure that slope or angle of attack. So that's your trend line. It's a dynamic trend line versus drawing lines underneath the charts. Okay. Okay, good comment, Wave Runner. I guess you guys would all leave if you didn't like it. So so James York, what are you talking about here? Oh. Okay, that's pretty good offer. I've got something for you. Make sure we have your you sign up on that Kendall report page. Make sure you do this. Go here, send us an email, or you can send me an email to info@Kendall Report. All right, so that's where you go. Make sure you give us that, because you're going to find out some really cool stuff. there's a couple things being worked on, like master classes and training and some other stuff. So yeah, definitely. So that's your copper. I have to look at this. I know this is another random uh, look here, but this is a weekly chart of corn, and we're still got some pretty positive numbers. All of these charts, by the way, I would call them the inflation charts. That's what we're going to call them, right? Um, all of these charts are pretty similar in that they all look the same. Lumber, corn, probably soybeans, all of this stuff looks pretty much the same, this commodity trade. And, it's just a matter of where this thing peaks out at. I mean, this has been a crazy run on corn, going back to last July, it looks like, let's see, what is it? Just from the lows, you're looking at 307 to all the way up to 734. So a double. So that's pretty. Being an ex board of trade guy, let's see here. I just want to bring up the beans, but I don't like this. Yeah, May no beans. Look at that. I don't know what that is. Sorry about that. There we go. Now we'll get there. All right. Yeah, so same chart, right? All of these commodities look the same. Anything that's expanded during this time. So we're going to see some pullback. We're going to see some adjustment here. So maybe the Fed, this is the, do air quotes, transitory inflation. This is what they're counting on, that all these things will start to stabilize. Production levels will get back to norm, and all those things will come back in. The question is, do demand levels change beyond what they are expecting? And that may be the case. Yeah, JJW, I've heard that. In fact, yeah, it's kind of crazy. The big box guys, I've heard, are some of the issue with lumber prices. They're playing some games on limiting supplies. I've heard that, and yeah. So Don Dumas, yeah. So would be at 4,600 by the end of May contract. There is no May. Uh, End of May. Obviously, that's not going to happen, and that's funny because my old nickname on the trading floor on the Pacific Options Exchange was Dr. Given, and Dr. Given used to go, "Hey, we're going to 4,400. We're going to 4,600," and somebody go, "Well, when?" I go, "I don't know. We're just going there." So anytime that I remember. Back when the Dow Jones was not at 3,600, and I said it was going to 3,600, and guys said, "Well, when's it going to happen?" I said, "Well, November, by the end of the year." Well, guess what? It happened in March. So, timing those things, as I just showed you and going through stuff, these trends are all heading there. It's just whether it's delayed by uncertainty in the markets or not, they're still moving in that direction. And like I said, went through a lot of details. The replay on this video will reveal all of the above. So make sure you go back and watch that thing. Yeah, so just the same thing with the Nasdaq going to 16,000 and all those numbers. That's where these markets are heading. Now they could blow up, okay? And I'm going to change my mind if that happens. I'm going to pay attention to the data and what's going on with our database and all that stuff. If I had not done that over the years, we would have spent a lot of money we didn't need to spend. I don't get into the attitudes and opinions. Everything's driven by the metrics and all this stuff. Right now, the metrics, this is what they're telling us. So let's go ahead and let's go, what time is it? 12:13 local Pacific time. Okay. So we went through the Dow. Let's touch on, we got to hit Bitcoin, right? I pointed out we got to sell on Bitcoin at around 55,000. Let me put that up there real quick. So we sold out of a long position at 55,182 on Bitcoin. We got a go short signal. Let me bring that up so you can see it on screen here. We got a go short signal at 54.58. That's still in there. The interesting thing what's going on with Bitcoin right now is we're hovering right around the 200-day moving average. We spiked under it. We closed one day under it. We were back above it. There's a fair amount of support at that number. It's a pretty good upslope here. So that number is going to be, the pivot is going to be 36,535 is that number. And that's going to be a critical level from that standpoint. So that on a daily basis, we have hugely negative trends. PPM1 down 2.78, 1.92, 1.94. This downtrend is not over yet, and it's just a matter of this formation that we're starting to see right now is going to be the bottom. So let's go over to a weekly chart, try to get some more on here. Might be able to show you some other things there as far as that goes. The 40-week moving average is very similar, 32,901. We spiked just below that. We did get down to 30,041. The buy the dippers showed up at that point. But what we're seeing here is the market grid has expanded substantially here. If we look at just the market grid numbers, it's crazy range, 22,308 on the extreme downside, 48,315. I think you can throw that 40-week 32 number in there, and S1 is 32,243. That's going to be the number to watch. If it gets through that, then you're looking at a 28 handle. I don't think that will happen. I think we'll hold in here. We'll probably set up between the 32,900, we'll just call it 32 even because it's Bitcoin, and 48,000 number. That 48 handle number is probably going to be a broad trading range. So you just have to watch some of your metrics if you're down there anywhere close to that 32 number, looking for an entry point, and then just a scalp out of here in $10,000, $12,000 moves. So let's go ahead and let's do Ether. Ether's got a crazy pattern on a weekly. Let me back up. Let me go to a daily first. Yeah, this is actually a very interesting pattern that's coming up. I've got the Fibonacci numbers on the screen. I've got a couple things on here. I think these are going to end up to be bogus. Much different formation, right? We're looking at and this is daily, so we have 10-pair moving average at 3,000, let me get the right number, 3,003. So that's your upside limiter right now. It's got a 4.39 downside pressure on that. So that's going to be tough to get above there. The 40-day moving average is at 27.61. So we're trying to claw back above there. We're last trade 27.21. I think it's going to get back above there, but that overhead resistance is going to be huge. So there most likely will be a retest of these lows down here at the 2000 level. That should happen. Maybe this bar here at the 2383 level will be the point. Let's go to a weekly. This is where this volatility gets wild, right? We saw, it was interesting, we got an RTX sell signal back at on the close at 3504. We spiked up the next week, and then we got this big wild, and then we got a STX buy, and this is on a weekly last Friday, and now we're back in the range. And if we look at the weeklies here, this is probably, if anything, a nice positive if you're on the on this wagon here trying to ride it. This 21-week moving average is going to be key. 2042, same number we came up with on the daily chart a minute ago. So that's going to be your support. You have positive numbers on a weekly ether chart. It's got 3.61 positive, 4.86, and 4.7. So that number, we spiked under it last week. This week we went right to it. The low 2049, 2042 was that average. So we went right to it, and we're bounced back, and we're back above that 10-period moving average. So what I would expect here is as we come into next week, we'll start to see the volatility collapse a little bit, and we'll see the ranges on the market grid tighten up quite a bit. Yeah, and you're right. When Bitcoin dumps, it does affect all coins. It really does. Yeah, we'll get into some individual stocks here in just a couple minutes. I think I've covered. Oh, you know what I do want to talk about gold, and then we can move on. Okay. I got a lot of junk on this gold chart. Let me get off screen so we can go full screen. I'm going to zoom in on this. And gold just continues to climb. This is the weekly chart I've got up here. It's climbed through this 40-week moving average. That's at 8. Get the value up here. That's at 1851. We went right through that thing like it was non-existent. PPMs are very powerful, 0.85. The PPM 2 and 3 have not turned up, so these averages are just about to happen. One of the things that is happening that is important is that cross of the 10-period moving average and the 21-week moving average. So it is now above there. 1800, 1797 is the 21-week, and the 10-week is now 1800. So they've crossed. That tells you, just like I went through the description, we should get some hesitation here, start to trade around some of these Fibonacci numbers. The number is 1889 to 1939 is going to be your peak. There's also some price projections in there as well. We look at that 1948 to 1994, but this 1939, 1948 is going to be your target range for this particular move. And the thing I wanted to cover, which I don't cover a lot in detail on the nightly videos, is this monthly chart here. Let me, And this is pretty important. Let me just let me go over to something here real quick. We're going to use we're going to go to the gold futures here on TradingView and get a little better look here. We'll use the front month contract. Should get more, oh, it's monthly. Let's go to daily and weekly. So this is the trend that's been unfolding, and this is most likely on gold. This is an ABCDE pattern that is set up, and this is most likely a fourth wave type pattern, and we should start to see, let me move this over, we should start to see this thing move toward the I'll just draw this in. This is kind of A, B, C, D, E. This is this pattern. And now we're starting to set up what's probably a 1. And so there should be a retracement. It should come back into these moving averages right here at that 21 and 40. That should happen. So we'll probably get a little backfill, and then this is going down the road. This is weekly. This is how this thing's set up. PPMs, like I was just showing you, look pretty darn good on this thing going across the board. So that's kind of breaks down the longer term pattern. And during this lower bottom here, we were getting a lot of Elliott 1-2, 1-2, 1-2s. And now when you get those type of configuration, let me just see. I'm trying to get a longer term chart here. This is back to 05. Hang on. Just trying to find the right. There we go. This will work. So yeah, this is perfect. So this is a monthly. So this really defines going back to 99, this big move up. And you could argue that this is, on a grand scale, this is something much smaller. So at risk of sounding like Peter Schiff, okay, this is a big bull market, and we're likely to move quite a bit higher in this pattern over time. And whether that is validating the inflation scenario, whatever that might be, that's really what we're looking at there. But PPMs, at least on the monthly, if I zoom out here, you'll see they are. Let me move this over. They're still negative on the monthly, and you're looking. Their PPM1 is still rolling here, so it's not ready to go. I've talked a lot about this on the channel before, is that we're going to hit this wall somewhere. Maybe we print up to the numbers I just mentioned, that 1900, 1940, 48 level, 1950, we'll call it, round off. It's going to come up to that level, but we're going to have a lot of resistance at those areas. And that's going to be absolutely huge. I just put the cursor over here so I could see where this last peak was, which was at 2075, but there's a couple levels here. There's a couple levels here that we have to watch for. What are they showing? Okay, yeah, 1894, and this is cash gold, so I'm not used to seeing some of these numbers. But yeah, but the PPMs are still not in position to ramp up for this next mode. So that's why when we were looking at the chart just a minute ago, we'll go back over to TradeStation here. We're looking at the this chart here. This illustrates this, that we're also about to potentially we've got just a couple more days in this month, we're about to get an RTX sell signal on gold, which tells us we got a couple months of sideways. Everything leads to that scenario that we're going to go for a couple months sideways into that market. Okay, so we are at that phase. What time we got? About 30 minutes. I'm going to put you guys off screen just for a second. Take a 1 minute break, and I'll be right back. Okay, it's that time. Let's go ahead and my camera followed me around. So, okay, thanks a lot, folks. Let's go ahead, and it's time for some individual stocks. I said I am going to go through some of the meme stocks: AMC, GME, BB, SOS, a couple of those. I'll go through those stuff, so don't give me those. I said I was going to go through the airlines, so I will still do that. Sorry, I'm trying to get my camera to zoom back in. Okay. Yeah, so let me write down a few of these. Okay, I got quite a few. So I did promise something earlier, and I'm going to cover that here real quick, as I do want to go through and we're going to take a quick look at crude oil. And I know I talked about this a while back, so let's go ahead and take a quick look. Oil's been flat since March, really. We've been locked in this 61 to 65 range in round numbers, and we're really not seeing any trends on the short term. To look at the weekly chart suggests that we still have some upward targets at $91 that we're still looking at. PPMs are starting to turn up. They're actually very, very bullish. So it looks as if we're going to start to surge even higher. The whole colonial thing ended up to be, I wouldn't call it a joke. I don't live on the East Coast, so I didn't have to hassle with trying to get fuel. But these targets are still looking pretty good. And going to the monthly, I talked about this before, 200-month moving average at 109, maybe. We're starting to set up some pretty good patterns. And as I've talked about this before, I won't do it again to you guys, but here's that momentum and entering into this new trend. So the PPM, the 10 period and the 21 actually crossed over last month. So we're into that phase where we're consolidating before we make a next move up. So it does look like there's quite a bit of upside in this market right now. Same thing here. I just brought up oil. Somebody asked for that, and it's just an ETN. So it's same reflection there. We're getting into that trend. This is the monthly, and if we go over here to the weekly, we'll get there as well. So somebody asked for DOGE. Let's take a look. This thing's just been kind of locked in. This is a 15-minute graph. Let me go to an hour. That's a better metric to look at. So this goes back to the Elon Musk sell-off here, and now we're setting up. PPMs are still in a mode where we're not really seeing anything set up here. Last time we saw a consolidation here, we got this dip. Cryptos tend to have similar patterns as they go through, and there's a lot going on with this one. I think even if we went out to a 4-hour graph, yeah, we're going to see where the PPMs are starting to get close to maybe turning around. Daily, there's might be enough data here now. Yeah, not really. But these charts here, we get into 3 and 4 hour graphs. These are starting to set up where we could get a move up. I wish I had the tool. I can't bring this up on TradeStation. It doesn't go there. So let's keep going through some other stocks. Here's TRLY, TRLY. A lot of resistance here. This is weekly, right at the 10 period moving average. I'll bring this thing over here so you can see the market grid. The resistance is going to be this 17.18. We're trading 16.61. A fair amount of resistance, but the but is looks like we're trying to set up a pattern. We came out of this weird formation, this big spike up, and then we're actually consolidating that. Best thing you could probably hope for is maybe a retracement of this spike back to maybe the $30 level, which would be a double, which would be a nice trade. But that's pretty early to say. There's going to be resistance all the way from 17 up to 20. support is going to be that 40-period moving average 1404. We'll go to NEO. NEO is starting to look like it's ready to roll. PPMs are all starting to turn up, but we're still negative. So there's a lot of resistance right at this 40, 39, 37, 39 is right in the resistance zone. So probably another week or two before we get out of that one. I'm just going to go right to Tesla, and let me get rid of some of these crazy calculations here. If we look at Tesla here, I talked about this in last week's live stream, is that the demand line was the 40-period moving average, and that this stock was going to rally back to that $600 level, and we're above that now. We're looking at right now at 621. That 609, it was the magnet. I told you that PPM 3 and the 20 and the 40 week moving average was going to be the driving force. Now we're going to get stuck between probably 660 and 610 on this stock. Will be your resistance zones. I don't know if there's anything on a daily. Yeah, daily resistance right here. 626 is PPM. Is the 21-period moving average. PPM 2, which tracks that, is turning up, but it's still negative by 0.63. So you get a lot of resistance right here. So look for a range just slightly under 600 to 626. So we'll call it 590 to 625 will be basically the range. We're trading at the high end of the range right now. It doesn't look like it'll be able to break out, although PPM 1 is turned up substantially. That just tells you that that's solid support down there at 587, and that is rising at about $3 per day. So basically in the next couple of days, that'd be 593, 597 is going to be where you're going to see a lot of support at those levels. Yeah, I brought up Mara, and we're looking at it's actually about to get a daily RXT sell signal. Got a nice strong day today, up 12.16. Probably getting a little overdone. Market grid will turn up tomorrow, and we'll start to see that as well. Let's put it over here. That's why I'm anxious to get this out. This is the view on TradingView, so you'll be able to see exactly what's going on there with the PPMs not far away. So we're hopefully by the I'm just going to give myself extra time. In the next couple of weeks we'll be there. Okay, let's go back to TradeStation here. Yeah, I don't argue with the Mickey Mouse coin, huh? Yeah, I said I'd do these. Let's do them. GME. It's about to get RTX sell signal. Actually got one yesterday, getting another one today. So we've seen this scenario where they get 2 or 3 in a row when these markets are surging. And let me do something here. Yeah, it's kind of interesting. I'm going to zoom in on this just so you can see this. This is the our model that bought this thing back on June of last year. It's still long at $4.50, up 4,600%. The intermediate models continue just to be bullish on this thing. I guess I could go over here. Let's go over to symbol. So we can put in GME here. Let me go into 1 year so you can see. Had a little choppy zone here, but it is actually long from about 175 right now. 175, 178. It's long from there. Looks like it's going to try to break out. I've talked about this stock. This stock went from being a bogus stock to something very, very significant. And this is a real company. It's not just a meme stock anymore. They have real capital. They've restructured. They're getting new executives. We'll see if they can actually turn this thing around. All right, so let's go back to TradeStation. Let's see, before we do this, let me put in AMC as well. AMC got a buy on this breakout the other day. It's still long. So, and this company is actually a company that's opening up again, right? This is like it's going to come back online, and people are going to go to the show again, and all this stuff is going to happen. Well, we'll see. There's probably something real here, and a lot of it's interesting. A lot of the Reddit stocks that we saw in the explosion, there's several of these companies that have actually shown that they're actually doing the right things coming out of this whole situation here. All right, I don't have that one in here. I'm just looking for some other stuff here. So let's go back to the TradeStation, hit some more stocks. What time we're getting to be? Quarter till. Yeah, let's go through some of the airlines. I said I would do that as well. UIL got a big reversal. Didn't manage not to get a RXT sell signal, and we've got way positive PPMs here. This is daily. Let's take a look at the weekly, because that's important to stay in touch with. Yeah, so this is an interesting pattern. I talked about it last year when we did the Buffett trade, and we took the other side of Buffett selling, and it worked out huge. I'm still looking for us to get above like this 200-week moving average, and that number right now is 66.41. So we're going to move toward this. The airlines normally are a really piece of junk business to be in. They got expensive equipment, they got unions, they have expensive employees. Everything's expensive to run an airline. So it's very difficult, I guess, to expect a lot from these guys. But getting back to pre-pandemic levels would put us back in the 80 handle and greater. Maybe we get back there, and we'll see. I don't know what kind of bailout packages or what kind of things actually goes on. Huge volume in this thing, 10 million shares right now, 10.8. Big volume going on, and a nice bid in the markets. That we look at the weekly chart here. Let me just look at something here really quickly. Bear with me just a minute here, folks. I want to log into another account and I want to go through these. All right, I put this back up here. This was the market grid out for last night. I want to go over and take a look at this Buffett strategy and the intermediate. This was one that I was looking at, and I think this is from a trending standpoint, just on general on the airlines. We've got about 10 minutes to go to the close, but in general speaking, this portfolio on an intermediate level was respectable in any other year. The daily and aggressive model did 102% last year. This did 18, now it's up 24%. But as we look at the open positions here very quickly, and I'll zoom in on this. We look at these open positions here. You see we own all 9 of these trades, and a lot of them have been on since December or before. So these are intermediate trades. The most recent one, UAL, just came on March 1st. So it was bought at $58. It's just up slightly. It's actually doing a little better here. But that was the last of this sequence of trades that came out. And what we want to look at here is all the gains. The big one, American, is actually got a 40% profit. You can see all the numbers here. Alaska Air has, ever since we did this portfolio, has been the big trader. That's been the big winner. Allegiant also was probably the biggest last year, and Alaska has been the most steady. This is up 68. That was bought back in August of last year on an intermediate model. So these are all very, very positive from the standpoint of what's going on with the trends, and these are identified intermediate trends, and we're really not seeing a lot of this stuff go on. So I think I can bring up American Airlines. Yeah, I can bring this up. I'll bring it into view for you so you can see it. We're starting to get long in the tooth on some of these, though. The current trade duration, typically it only holds 117 days. It's now 166. It's in what we call accumulate phase. And then as far as returns, normal returns on this stock is 18, call it 19%, standard deviation 22. Well, it's blown through all that. This thing's up 36 right now, so it's blown through all that. But those metrics, I've talked a lot about this in the past, is these type of metrics are likely to happen in this rebound rally. And then once we exit these trades, come back in, we're going to start to see more normal metrics going forward, as going back to a statement I made probably a couple hours ago, that we're really in this harder to make money phase. Otherwise, we're not going to see. You look back on 2020, that was probably an opportunity of a lifetime to make some serious money. There's no doubt about that. So let's go ahead and go back to trade stations, see what else you guys are looking for. Yeah, I don't know a lot of these stocks. Here's Microvision, MVIS. Bear with me one second here. Yeah, this is a crazy pattern, high volatility, reasonably. I suspect this is probably a lower cap stock, and yeah, so you're seeing the grid actually narrow in. That's a good sign. But as far as trading this thing, you're still going to look at quite a bit of volatility, somewhere between at least S1 13.12, 12.29 on the downside, upside 14 and a half, 15 and a half range on the upside. The extreme is 17.02. I really don't see any trends or anything on this one. So here's FND, and this thing it's at least in a trend. We've got some decent numbers on PPMs as far as that goes. Major support is going to be 92.03 on this one, but this is probably part of looking at like the lumber and a lot of the commodities. This is a trade that definitely got played really well as far as, obviously floor and decor. This is part of that trade, maybe that leading trade last year that's going to leg going forward, and that's where like the Kathy Woods of the world got in trouble. They thought that it was 2020 was going to go on forever. That's why she was, trying to catch the falling knife, and yeah. So anyway, let's see what else we got here. Yeah, so we got BABA I'm bringing up right now. Somebody asked what's going on with China stocks. We're coming close to 200-week moving average. A lot of these stocks have just been out of play. Amazon rules, but it is a Chinese stock. So there's a lot of downtrends here. PPMs are all super negative, super downtrends. And I would look to see that 198 on this one is the 200-week moving average. Takes that out, then I'm not sure. I don't have any projections here on what this might be. Let me do one thing. Yeah, this is what I was looking for. There are some downward projections here right now. 191, 171, 158 is potential in this one. So that also maps out to a previous extreme of a target of 166. So 166, 168 is possible if we get through 191. That's going to be your next level. So my guess is, just looking at PPMs, it's setting up. Next couple of weeks would tell us. So come next week, I'll try to cover it again next week. Yeah, I did an expansive deep dive in the S&P earlier, so I'm just going to run you to the replay on that one. Just looking to see what you guys got. Let's go and take a look at where the markets, how they're trading as we come into the close. Just a look at that. We're at 91.50 on the futures, up 6 handles. Just a nothing day, but maybe that's what it was supposed to be. There really wasn't any news. There wasn't anything to come out. Tomorrow, at least, we get the claims, and there's a number of metrics that will come out. I'll cover that in tonight's video. But I'm probably going to, as usual, depending on what comes up in tonight's video. The last couple nights, videos have been ridiculously boring. There's been nothing to talk about at all, nothing going on. And I think the videos have been around 10 minutes. I mean, there's just nothing to talk about. And that's even a good or bad sign. We'll find out. I just want to bounce over. I just want to see the cash here. Yeah, 41.93 up 510. I think 02 was the high. Let's just review the cash range. Yeah, 0261 was the high. We look at the grid for for today. Turns out, let me get to the right number. Oh, this is weekly. Let me get the right chart real quick. Yeah, 4206.01 was R2. I thought we would get there. We obviously did not get there, but we got to 02, so we fell short of R2. And S179, we're a little short of that as well. So, but basically in round terms, we did an S1, R2, which is what I thought. And a lot of times that becomes a number, especially when you have expanding PPMs. You're typically, that tells you probabilities are for an S1 and an R2 print. And you can always do an R3 or an RXT, especially in the ranges. And the thing I want to point out as we look at this chart here is that the ranges have gotten down pretty tight. So I'm going to go back to the futures here. We're going to watch it close together as we come into the final minute and a half. Really nothing going on here. Doesn't seem to be any excitement whatsoever. No squaring up ahead of the claims numbers. Nobody seems to be concerned. Continuing claims ends up to be a nothing number at the moment. It used to have some significance, but not anymore. Just see what you guys are looking at. Yeah, like I said, pretty boring close it looks like. Up 625 now. I don't have any expectations. We're in the final minute. A little bit of a bid, not much. We'll watch it for just a couple, for maybe a minute after the close. There we go, little bid, 93.50. Little spike on the close, that was it. That little print up. The screen will halt for a second, then we'll start seeing the feed come back in. Okay, there you go. So back to 92.50. What was that high print here? I had printed up to 94. I saw 75, but they snuck in a 94. Nothing really there, folks. Up 750. We'll look at the cash chart real quick. But this is the thing I was about to bring up. Let me get rid of something here. And this is the thing I was going to bring up a minute ago. Is this range contraction, and I brought it up a little bit ago. But with PPM1 at a plus 0.32, it's going to stay over probably 0.20, even if we get a little flatness as we come in when the calculations come in for tomorrow. But this is strong enough. We should remain above all these averages, and I'll cover all this stuff in the video tonight. A couple little laggards here I wanted to USO, I covered oil earlier. We'll go ahead and just leave that analysis as far as that goes. Make sure you'll do that. And yeah, so guys, give me a like and make sure you subscribe. We're so close. We're under 1,000 people to get to 30,000 on the channel. So, you know, like I said, make sure you subscribe and do all that stuff. Also, just real quick, and I'll come back on screen in a minute, but I would like you to go to kendallreport.com and sign up for this exclusive access. We do not harass you or send you a bunch of crap spam. When we send something that matters and things that we're trying to work on and access maybe to TradingView and all kinds of other things. So make sure you do that. It's not too much to ask. So here I am, folks. Thanks again for coming. Really appreciate everybody participating in these things. You know, it's, I don't know, 2 hours and 35, 40 minutes. So it's a long time to hang out. And I really appreciate folks coming around and hanging out. So make sure you like and share these videos and all that good stuff. And I will see you in tonight's video, as always. And then if anything happens between now and Friday, any crazy stuff, I'll light the screen up for into the close or something like that, just to cover what's going on. And I'll usually try to do some things on the Twitter account. So if you haven't followed me on Twitter, it's actually Twitter/Portfolio Expert. Expert has no E in it, so Portfolio X Expert. That was my idea many years ago. So anyway, thanks again for watching the channel and participating. We really appreciate everybody's participation. Have a great rest of your day, and we'll talk to you on tonight's video. Have a great day.